Hello, ladies and gentlemen, Greg Mikulowski with the Forex Quick Look. I'm going to take a look at the dollar versus Swiss in this report. Today's date is April 19, 2024. Let's get started. I'm going to focus first on the hourly chart here. And what we saw in trading here today was a sharp move to the downside. This is on the back of the Israelis' attack on Iran. It led to a sharp fall in the dollar, a sharp rise in the Swiss franc as a result of flight to safety of that currency. In the process, the price cracked below both the 200-hour moving average and the 100-bar moving average on the 4-hour chart. That's this blue line in the chart. We also moved below this trend line and continued its rotation all the way down through this swing area, but short of the next swing area down here between 0.8998 and 0.9005. So right around the 90 level, the low price was just above that, the high of that swing area at 0.9005, and the price then started to rotate back to the upside as a report of the extent of the attack started to come out, and we saw the sharp rebound back to the upside. Now that rebound did have a was limited in that the price high came right back up to this old swing level right here, which I had been earmarking in some of my previous videos this week. That level corresponded with this high right here. We came up to that level here before breaking to the upside, and we were based against the level before moving higher here. In the last or 2 days ago, the price did come back down to that level, found support buyers. We did break below it in trading yesterday, but then moved back above it right here. And in trading here today, as you can see, the high price after the initial reaction to the downside has been capped at that 0.9095 level. So we're going to need to get above that level. We're going to need to take back the 200-hour moving average and the 100-hour moving average up here to increase the bullish bias for this currency pair. Absent that, and a move back below the broken trend line right here, back below the 100-bar moving average on the 4-hour chart, would increase the bearish bias. So right now we're trading in between resistance up here, support down here. We'll see how the market reacts one way or the other in trading here today. Look for a break to lead to lower levels. Look for a break above the 95 level to potentially lead to higher levels if we can get above the 2 moving averages. Taking a quick look at the daily chart here, the high price that we saw in trading last week and this week, I should say, came up to this swing area between 0.9112 and 0.91465. The high prices this week from earlier this week reached up to the 50 level, just above that 46 level, but could not sustain the momentum. We've seen increasing selling at lower levels in trading here today, and the high price today also fell within that swing area. You're going to need to eventually get above those levels, from not only the hourly perspective, but the daily perspective to increase the bullish bias in this currency pair. On the downside, the low price that we saw in here today did fall just below the broken 38.2% retracement of this move to the downside. But that move was short-lived, and we did bounce back to the upside. We also held this swing area right here. We always like to see the 38.2% retracement hold, and it did a pretty decent job of that in trading here today. So that's my technical look at the dollar versus Swiss. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.